Welcome to the PAI Morning Briefing. I'm your host from Pantheon AI, and today is February 11, 2025. Good morning, everyone. I'm thrilled to have you with us as we dive into this day's market pulse, breaking down the latest trends, noteworthy developments, and some opportunities and challenges on the horizon. Grab your coffee because we're in for a lively conversation today.
Let's begin with a quick overview of the markets. The major U.S. indexes had a mixed day yesterday. The S&P 500 is sitting at approximately 6,048.4, barely changing with a decline of about 0.015%. Meanwhile, the Dow Jones is trading around 44,334.69, reflecting a slightly steeper drop of roughly 0.1502%. On the brighter side, the Nasdaq managed to edge up, currently quoted at about 19,655.54, recording an increase of nearly 0.27266%. Over the small-cap Russell 2000, we see a modest dip as well, trading near 2,275.93, down by about 0.09781%.
Switching gears to cryptocurrencies, Bitcoin is positioned at around 97,046.4375, sliding roughly 0.407%, while Ethereum is showing a modest uplift at approximately 2,666.6599, gaining about 0.19436%. Even in these volatile assets, where every tick matters, such subtle movements remind us that patience and attention to market details go hand in hand.
Now let's step into a deeper discussion on major market trends. In the backdrop of relatively subdued official moves in the traditional indexes, there's a distinct undercurrent of transformation, innovation, and disruption. While the U.S. indexes seem to be holding a steady course with the minor fluctuations that reflect cautious investor sentiment, other parts of the market are buzzing with significant developments.
One trend we're witnessing is the ongoing evolution in the automotive technology space, particularly with the entry of advanced self-driving features. A prominent news story making waves today originates from China. BYD, one of the country's leading electric vehicle manufacturers, has announced that it plans to integrate its self-driving technology into a vast majority of its car models without charging extra. Yes, you heard that right, no premium surcharge for self-driver capability across even some of its more affordable models. This strategy aims to democratize advanced automotive technology, offering impressive tech that was once a luxury to consumers across the spectrum. However, this bold move presents a formidable challenge for a major player like Tesla, whose market position in self-driving innovation might now face increased competition.
The notion here is quite straightforward. As more manufacturers pursue similar enhancements in their vehicles without additional fees, the playing field could level, forcing traditional frontrunners to evolve more rapidly. And as always in innovation, the risks and rewards are significant.
Another striking narrative in the market involves what some analysts are calling an AI version of a global trade war. A series of news cases, repeated for emphasis, have highlighted how the AI landscape, particularly around chip export controls, continues to heat up. The story centers on a breakthrough by DeepSeek, an emerging player in the artificial intelligence arena, which has managed to bypass conventional chip export controls intended to prevent Chinese companies from catching up to US-based artificial intelligence technology. The concern here for policymakers is that if one company can navigate around these restrictions, it may not be long before others follow suit, potentially undermining the technological advantage that the U.S. has cultivated over the years. This development raises thought-provoking questions regarding the effectiveness of export controls and whether newer technologies demand a rethinking of old strategies.
On the e-commerce and retail front, we have compelling news about Shopify. One of the repeated stories today centers around Shopify's recent fourth-quarter revenue performance, which beat expectations. However, there's a twist. Although revenue figures were strong, guidance for the upcoming period was decidedly mixed. Executives remarked that first quarter is consistently their lowest gross merchandise volume quarter from a seasonal point of view, which has investors debating the balance between short-term results and longer-term growth potential. A separate narrative from Shopify's holiday season results paints a picture of roaring performance during the festive period, yet with a tempered forecast suggesting growth might slow down as the momentum subsides.
Such mixed signals from a leading e-commerce platform remind all of us that even stellar past performance can sometimes be accompanied by a cautious look toward the future, a sentiment that resonates with many investors in today's uncertain and dynamic environment.
Before we delve into a detailed sector analysis, let's take a moment to consider these major stories collectively. We are witnessing disruptive innovation in automotive technology. the strategic battles in the realm of artificial intelligence and chip technology, and the evolving challenges within the e-commerce sector. Each story, from BYD's self-driving feature rollout to DeepSeek's maneuvers around export controls and Shopify's fluctuating performance, is more than just an isolated incident. They signal broader structural shifts in industries that investors have long relied upon. It's as if the market is a giant orchestra, with each sector playing a slightly different tune today, harmonizing to create a unique symphony of risk and opportunity.
Now let's pivot into a comprehensive discussion of today's top stories, approximately 10 compelling narratives shaping the market landscape.
First up, the BYD saga. As I mentioned earlier, BYD, the Chinese electric vehicle powerhouse, is making an unexpectedly bold statement by offering self-driving technology across its model range without any additional cost. This announcement has been repeated in several news outlets, reflecting its potential to disrupt the credit, particularly the competitive space occupied by Tesla. What's interesting about this move is that BYD is not only expanding its technological portfolio, but also redefining the cost structure that consumers expect for such advanced features. Analysts argue that if BYD's strategy proves successful, it could force Tesla to reconsider its pricing model, potentially spurring a price war. One even joked that Tesla might have to start offering complimentary electric lemonade with every car purchase someday just to sweeten the deal.
Next, our second major story involves the AI trade dynamic challenged by DeepSeek. Chip export controls have long been a cornerstone of U.S. strategy to maintain technological superiority in artificial intelligence. However, DeepSeek's maneuvering has once again put these controls in the spotlight. The breakthrough suggests that while regulatory frameworks are essential, innovation might find ways around them, leading to what some term as the AI version of a global trade war. Policymakers are now tasked with the difficult job of adapting regulations that can address challenges posed by rapid technological advancements without stifling innovation. It's a classic story of David versus Goliath in technology, only this time, the stakes are measured in the future of artificial intelligence itself.
Our third story brings us back to the world of e-commerce with Shopify's earnings report. Shopify reported fourth quarter revenue figures that exceeded expectations, which might sound like a win for many investors. However, the mixed guidance for the first quarter has left the market with a lingering question: how sustainable is this growth? The company noted that the first quarter tends to be seasonally weak when it comes to gross merchandise volume. To compound the story, another report from Shopify emphasized that while their holiday results were robust and even roaring, their podcast for subsequent growth sounds rather cautious. It's like having a delicious, hearty holiday feast and then being told that the dessert is on hold this year, disappointing to some, yet it may temper overenthusiasm in others.
In our fourth narrative, we revisit the ongoing dialogue around AI and global competitiveness. Several outlets reiterated the challenges posed by stringent chip export controls aimed at curbing China's technological advancements. The recurring theme in these reports is that the sheer pace of innovation, exemplified by the work of DeepSeek, might require a complete rethinking of these old strategies. Is it possible that in our bid to halt technological rivalry, we might inadvertently slow down progress in some areas? It's a balancing act that regulators and market players must manage with both caution and courage.
Fifth, in the realm of automotive technology and sustainability, BYD's innovation isn't just about adding self-driving to the mix. It speaks to a larger trend of integrating advanced features into electric vehicles at a time when governments, consumers, and companies are all emphasizing sustainability. The price of technological advancement is dropping, and with it, the threshold for adoption is lowering. What used to be an elite technology enjoyed by a few could soon become a market normal thanks to strategies like BYD's.
Our sixth hot topic is the subtle but crucial movement within the traditional markets, as seen in the performance of the major indexes. While on the surface, the S&P 500 and the Dow Jones are showing only minor declines, and the Nasdaq a modest uptick, these movements are reflective of a market trying to balance between cautious optimism and underlying economic uncertainties. Investors seem to be pinching pennies here and there, waiting for a clearer signal before making sizable moves. It's a picture reminiscent of a chess match, where every small move counts, and planning several steps ahead is the norm.
Seventh, turning our attention to the cryptocurrency arena, Bitcoin and Ethereum continue to be the talk of the town. Bitcoin's slight drop by nearly 0.407% reminds us that even digital gold is not immune from the daily ebbs and flows of market sentiment. Ethereum, on the other hand, edges up by almost 0.19436%, serving as a subtle reminder that altcoins can sometimes provide key diversification benefits in these turbulent times. There's always that humorous remark among crypto enthusiasts that Bitcoin might be the grandpa of the digital currency world steady and a bit set in its ways, while Ethereum is like the energetic younger cousin, always experimenting with new ideas.
Eighth, in the overarching dialogue about global market implications, we see these diverse trends converging. The disruptive moves in China's automotive industry, the delicate dance of AI regulation, and the cyclical nature of e-commerce performance all have ripple effects that extend far beyond their respective sectors. Global supply chains, investor sentiment, and regulatory frameworks are increasingly interdependent. It makes you wonder if we're looking at a future where every new technological breakthrough isn't an isolated development, but rather a new thread in the intricate tapestry of global economics. And if that is true, how do we, as investors and market enthusiasts, position ourselves to not only survive but thrive in such an interconnected environment?
Ninth, there's a subtle yet important discussion unfolding around traditional sectors like energy, finance, and tech. For example, while tech continues to be the hotbed of innovations and disruption from AI to self-driving cars, energy and finance are also undergoing transformations. In the energy sector, the push for sustainability and alternative energy sources is ever urgent, especially as geopolitical concerns and supply chain vulnerabilities persist. Meanwhile, traditional financial institutions are grappling with digital transformation, with many integrating AI and automation into their operations to better serve an increasingly tech-savvy client base. The cross-sector influence is palpable. Innovation in one field often catalyzes progress in another.
10th and finally, expert insights and predictions are mixing with measured caution and visionary optimism. Many industry veterans are warning that this period demands a higher degree of agility. Whether it's the competitive pressure from Chinese automakers or the unpredictable twists in the realm of AI-related trade rules, the key takeaway is to remain flexible and forward-looking. There is a clear trend toward disruption, and with disruption comes both risk and reward. We're essentially seeing the dismantling of old paradigms, and the question that lingers for all of us is this: are our strategies adaptable enough to embrace the new market order without leaving us in the dust?
Now let's shift our focus to a more detailed sector analysis. In the realm of technology, for instance, the themes we discussed earlier are front and center. The strides being made in self-driving technology, particularly by companies like BYD, are not merely about automotive upgrades. They signal the broader integration of artificial intelligence into everyday technology. For technology hardware companies, this means an increased demand for more sophisticated sensors, faster processing chips, and even more robust connectivity solutions. For software firms, there's an imperative to develop algorithms that are not only safe and efficient, but also scalable. And while there's a clear opportunity for these companies, there's no escaping the pressure to innovate faster and more effectively than ever before.
Meanwhile, the energy sector, which has traditionally been somewhat insulated from the rapid technological evolution seen in other sectors, is now undergoing its own revolution. The drive for sustainability has led to increased investments in solar, wind, and battery storage technologies. Coupled with this is the challenge of navigating a global landscape that is increasingly competitive, as suppliers vie for a bigger share of green energy contracts, and as governments worldwide push for less reliance on fossil fuels. This transformation is not merely environmental, it's economic. Companies that can adeptly adapt to both the technological and regulatory changes in the energy arena could well become the titans of the next decade.
In the financial sector, we're watching a similarly dynamic transformation. As banks and financial institutions grapple with the twin imperatives of digital transformation and increasing regulatory scrutiny, the integration of artificial intelligence and machine learning is becoming more commonplace. From fraud detection to risk management, these tools are not just enhancing efficiency, but also providing a competitive edge. However, with increased digitization comes the risk of cybersecurity threats and data breaches, risks that are forcing a rapid evolution in how institutions protect themselves. The blend of traditional finance with high-tech innovation is creating a sector that is both old and new, challenging investors to differentiate between fleeting trends and sustainable transformations.
Let's not forget the ramifications on a global scale. Global market implications from these stories are far-reaching. The competitive moves made by BYD and other innovators in China, for instance, don't just impact local markets, they ripple outwards into international supply chains and could even affect global pricing mechanisms. Similarly, the strategic maneuvers by companies like DeepSeek may force a reevaluation of regulatory policies worldwide, potentially spurring coordinated efforts among nations to manage technology flows across borders. For investors with international portfolios, these developments remind us that national markets are often intertwined in ways that can amplify both gains and risks.
Expert insights in today's episode tend to emphasize the importance of adaptability. One of the recurring questions among seasoned analysts is how investors should balance the allure of cutting-edge innovation with the potential perils inherent in rapidly shifting regulatory frameworks and market competitive dynamics. A colleague of mine humorously pointed out that investing in today's market is a bit like trying to predict the weather in a tropical storm. It might get crazy, but if you keep your umbrella handy, you're in for an interesting ride. That encapsulates the sentiment quite elegantly. Caution, preparedness, and a keen eye on emerging trends are paramount.
I'd like to share a few predictions and insights. First, expect the auto and technology sectors to experience continued pressure as companies vie for leadership in self-driving and AI-driven innovations. The competitive dynamic between BYD and Tesla is just the tip of the iceberg. It's a harbinger of a broader shift in consumer expectations and technological benchmarks within the automotive space. Second, keep a close watch on the semiconductor and AI industries, particularly as regulators scramble to balance national security interests with the rapid pace of technological advancement. In the medium term, the rules of the game may well be rewritten to account for these disruptions.
Third, the market's reaction to Shopify's mixed messages will be an interesting narrative to follow. Despite roaring results during the holiday season, the tempered guidance for future quarters suggests that even marquee brands are not immune to the challenges of maintaining growth once introductory excitement wanes. On a lighter note, it's almost as if Shopify reminded us that sometimes even the best roller coasters have a few dips along the way, and that might just be part of the ride.
Before we wrap up, let's step back and examine what these developments mean for you, our audience. In today's complex and dynamic environment, the need for information that's not only timely but also insightful has never been greater. It's not enough to know the numbers or the headlines. One must understand the context, the interplay of factors, and the short and long-term implications. How are you positioning your portfolio in light of these technological shifts and regulatory challenges? What strategies will you adopt if global trade dynamics in AI continue to evolve at this pace? These are the questions that seasoned investors ponder daily, and they serve as a reminder that our journey in the market is as much about questioning and learning as it is about capitalizing on opportunities.
Let's repack the key takeaways from today's briefing. The traditional markets continue to show cautious fluctuations, with major indexes trading at nearly flat or with very slight movements, while niche segments like cryptocurrency demonstrate their characteristic volatility. In the automotive and tech sectors, aggressive moves like BYD's decision to integrate self-driving capabilities without additional costs signal a new competitive battle where traditional leaders like Tesla may face unexpected challenges. The AI space, particularly with DeepSeek's breakthrough in circumventing chip export controls, raises important questions regarding the future of technology regulation and the possibility of an AI-driven trade conflict. And finally, in the realm of e-commerce, Shopify's mixed performance serves as a microcosm of the broader narrative of growth intertwined with caution, a true testament to the multidimensional nature of today's markets.
As we conclude this in-depth conversation, I want to leave you with some thought-provoking questions. What does it really mean for the future of automotive technology when advanced features become standard rather than premium? Will the evolving landscape in artificial intelligence prompt us to rethink how regulatory frameworks are structured across the globe? Or will innovation continue to outpace policy? And in a world where every sector, from technology to finance, faces its own unique challenges amidst global interdependencies, how do we, as investors, find clarity and confidence in our decisions?
Thank you for joining me on today's episode of the PAI Morning Briefing. Your engagement and curiosity are what drive our continuous exploration into these dynamic topics. Remember, Pantheon AI is your information co-pilot, dedicated to equipping you with the insights you need to navigate these complex market waters effectively.
Don't forget to come back for the next episode tomorrow, and as always, feel free to ask any questions to our AI co-pilot. After all, engaging with these perspectives is what sharpens our market acumen. And on that note, remember, learning shouldn't feel like a full-time job.
Until next time, stay informed, stay curious, and keep challenging the conventional wisdom. Have a great day, everyone.